Welcome to today's Explainer. We're going to completely demystify QuickBooks checking today and really look at exactly how your real-world banking activity connects with your bookkeeping records. There is just so much confusion out there about what actually happens when you link a bank account to accounting software, so we're going to break the whole thing down step by step. Let's explore the tools available to you and unpack the absolutely crucial workflows that keep your financial data accurate and reliable. Okay, let's dive into this because we really need to shatter the single biggest beginner myth in the world of modern accounting. People constantly ask, hey, does connecting my bank account mean my bookkeeping is just finished? The answer is a giant, resounding no. It is incredibly tempting to think that because QuickBooks Checking operates right there within the QuickBooks ecosystem, the software is just going to magically do all the work for you. It's just not true. Automation brings the data in, sure, but it definitely does not replace human oversight. Your banking integration is just the starting line, not the finish line. To really grasp this, think of it like a two-bucket system. In one bucket, you have QuickBooks Checking. This is the actual, real-world bank account where your hard-earned cash sits. In the other bucket, you have your chart of accounts. That's the bookkeeping record of your banking activity. The crucial thing to understand here is that while these two work together seamlessly, they are absolutely not the same thing. You've got to manage the actual money in the first bucket and then carefully organize the record of that money in the second. Now, setting up a dedicated business account like QuickBooks Checking is basically the foundation of good financial hygiene. Separating your funds provides massive benefits, right? It easily identifies your actual business income, strictly tracks those deductible expenses, and makes tax prep a total breeze. But, and this is a big but, opening the account is literally only step one. You must consistently use it strictly for business. If you start mixing in personal transactions, like buying your dog's food on the company card, you completely undermine the entire system. Let's move to and see how this builds into the core bookkeeping workflow that actually turns that raw banking data into a completely accurate financial record. It's a simple 5-step process. Step 1 is the download. That's the automation bringing data into QuickBooks. But then we hit step 2, review. Downloaded transactions are not automatically correct. Step 3 is decision time. You either match it to an existing record or you categorize it as something brand new. Only after making that choice do you hit step 4, which is record. And finally, step 5 is reconcile, which basically just proves that your bookkeeping matches reality. Automation makes that first step super fast, but your careful execution of the rest is what actually makes it accurate. Now, what's really interesting about this workflow is the concept of the match. This is absolutely critical to master. When a transaction downloads from your bank, you cannot just blindly add it to your books. You always have to stop and ask yourself, wait, did I already put this in QuickBooks? For example, if you recorded a customer payment manually yesterday, and then today that same payment downloads automatically from the bank, you must match it. If you just click add for everything that comes in, you will literally record the exact same income twice. Suddenly, your books say you've made double the revenue, which means you're going to owe double the taxes, and your records are just a complete mess. And this is exactly where people fall into some extremely common traps. Think about moving money from your checking into a savings envelope. That is simply a transfer. Treating it like new income or a new expense is a fast track to duplicated, messy books. Or here's a really massive one, paying a business credit card. When you buy supplies with a card, that purchase is your expense. Later on, when you pay the credit card bill from your QuickBooks checking account, that payment is just a transfer to pay down debt. It is absolutely not a second expense. And again, just because a transaction pops up in your feed doesn't mean the software guessed its category correctly. It always needs your review. And this brilliantly illustrates how you can reward all your diligent bookkeeping by using the digital envelope strategy. Once your bookkeeping is clean, you can use it to strategically manage your actual cash. Just like dividing physical cash into paper envelopes, you can create reserved fund categories electronically right within QuickBooks Checking. You might reserve, say, 30% for federal taxes and maybe 40% for payroll. Every single time you receive income, you electronically move a percentage into these envelopes. It physically protects that money so you don't accidentally spend funds that are actually owed to the government or to your team. Beyond just the envelopes, this whole integration unlocks some seriously powerful cash flow tools. Think of it kind of like a telescope letting you look far down the road. You see, a highly profitable business on paper can still completely fail if the actual cash isn't sitting in the bank when the bills become due. These tools help you look ahead to view your truly available funds, monitor upcoming income, and spot those dangerous potholes where cash might be tight. Now, obviously, a projection is just an estimate. It's not a guarantee, but utilizing these tools allows you to make incredibly informed, strategic spending decisions rather than just driving blind. So, the crucial point we really want you to take away today is this. A banking integration never, ever replaces the actual bookkeeping process. QuickBooks Checking gives you these incredible tools, the envelopes, the cash flow projections, the side-by-side ledgers, but none of that matters even a little bit if the underlying data is wrong. Automation gives you the speed to download data instantly, but your deliberate human review is what guarantees the accuracy. Matching instead of duplicating, correctly identifying your transfers, and consistently reconciling accounts, that is where true financial clarity is born. Which leaves us with one final question for you. When you log into your software tomorrow, will you let the automation manage you, or will you use your human insight to expertly manage it?